Hello, everyone. Good afternoon, and welcome to this weekend's gold market analysis. Before we dive in, I just want to say a big thank you to everyone who supported last week's video. It was such an honor to have it featured as an editor's pick on TradingView front page. The response was incredible, so many new followers, thoughtful comments, and over 180 likes. I truly appreciate every single one of you tuning in and engaging with the content. If you're new here, once again, you are welcome on board. Now, if you've been following closely, you will recall we identified a descending channel last week, as you can see on your screen, after capturing the character of price action since April 22nd. That was when we saw price hit that all-time record high at the $3,500 level. And as you will see during the previous week, we can see that price is still respecting that structure. Buyers had found it difficult to break through the resistant line of the descending channel. And as you will see, we were able to capture a sell move to see price drop to as far as a 3,250 before price action came back again into the resistant line of that descending channel. In fact, for most of last week, price action hovered around the upper boundary of the channel, showing signs of hesitation and consolidation. Now, this isn't just a technical pattern, it's a reflection of a market that is grappling with uncertainty at this point. So, what is really going on in the gold market? You see, what we are seeing on the chart is a reflection of a tug of war between opposing forces. On one side, gold continues to draw strength from its safe haven appeal, especially with the rising geopolitical tensions and growing concerns over the global economic outlook. But on the other hand, there is still a lot of caution in the air, mainly because no one's really sure what the Federal Reserve's next move will be on interest rates. Holding rates steady last month didn't really bring comfort into the market, it just kept everyone guessing. Now, looking at how price is behaving on the chart, it is clear that traders are on the edge, watching every piece of economic data for any hint of a shift in monetary policies. And speaking of data, we've got a loaded week ahead of us. From the US economic calendar, as you can see on my screen, we have the ISM Manufacturing PMI coming in on Monday. On Wednesday, June 4th, we have the ADP Employment Change, the ISM Services PMI, and of course, on Friday, we have the average hourly earnings, and of course, the big one, non-farm payrolls, all lined up. These events you see here are key drivers of volatility, and you can bet both the big players and retail traders know it and are paying close attention. That's exactly why gold spent most of last week in a state of indecision. The market was essentially on pause, waiting to hear what the data will say before making any aggressive bets. So in this video, I will walk you through how all these fundamentals are showing up on the chart, what price action is telling us about the market psychology, and how you can position yourself for the week ahead. Before we jump in, please note that everything I share here is based on my own analysis of the chart. It's not financial advice, so please trade responsibly. With that said, let's dive right into the business and see what the gold market has in store for us next week. So as always, my first point of contact will be on the 4 hours time frame. And of course, this time around, the descending channel still remains intact. And the only thing that I have changed from the structure is the key level going into the new week. Now, as you will see, my key level is exactly around the $3,280 level as highlighted here. You see how the structure had played a significant role in determining the direction of price action in the last 6 to 7 weeks. We saw the first, this mid month of April, it was more of a support line here before price broke down the structure during the last trading day of April. And at the beginning of May, we saw price climb back above the structure. It stayed there for about a week or so before we saw it break down. And right now, price action is back above that 3,280. And throughout last week, we saw how, despite the fact that we saw selling pressure from the resistant line of the descending channel, sellers were unable to break through that key level. Now, for the fact that price still remains above that key level, the question is, will this be a platform that will send price climbing up, breaking out of the resistant line of that descending channel for the first time in 6 weeks to incite another wave of bullish momentum? Or are we going to see a situation where the key level will be broken to the downside, retested to incite selling ideas that may bring price back into the support line of that descending channel? So, if you would ask me, we are at a critical juncture in this market, and I'm not surprised, especially when everyone is looking forward to the NFP next week. So, this is what I will be looking to navigate this market next week. I will maintain a bullish bias as long as price remains above the 3,280. And if price goes ahead to break out of the 3,325 level, price will have broken out of the resistant line of that descending channel to confirm the strength of the buyers. But if that is not the case and we see price drop below the 3,280, continued selling pressure below the 3,280 will further confirm that sellers have come to say, and a further breakdown of the support line of that mini descending channel may likely see price drop to as far as the support line of that major descending channel. So there you have it, my in-depth look at the XAUUSD for next week. Trust me, I will be with you in the comment section of this video to give you an update on what I'm thinking after monitoring the character of price action around this confluence during the early hours of next week. If this video helped with your independent decisions, give it a thumbs up and drop a comment below, as I would want to know how you are approaching this market next week. And don't forget to subscribe for more analysis like this. Thanks for watching. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.